Hey, traders and investors, Todd Gordon here with tradinganalysis.com. It's been a long time since I've just done a one-off YouTube video. Got to get back into it. Miss you guys. Hope all's well. Whew, busy. So Friday afternoon, 45 minutes until the close. I just wanted to kind of take you through what I'm seeing, positions I'm in, and just kind of talk about quickly. If you've been following along, I've been way too quiet. I apologize. I took a year off from my business to just go back and check the corporate life to make sure that I wasn't made for corporate life. And I think I and the awesome group, the RIA I work for, would agree I'm not meant to be a corporate guy. I'm meant to be an entrepreneur. So I've set out to build my own wealth management company, and that's what I'm doing right now. Trading analysis is continuing to go, doing well. We're tracking the markets, trading, and we put a hedge on that I want to take you through here. Let me just shut that off and kind of show you what we're doing here with the option position, show you where we are with the overall markets. And also I want to show you my retirement account, my 401k, which I have an individual 401k for my business, trading analysis. I show you this. This is personal capital. I keep track of my personal finances here. It's a great tool. If you guys don't use it, it's free. So I'm showing you my 401k last year, and here's the 366-day return in blue, and the S&P here is in orange. And last year it was up 82%, 81.6%, where the S&P was up 15.5%. So amazing year. It was very heavily weighted towards tech, which I felt like that was the place to be. And basically what I'm saying is I'm going to break the portfolio down. I'm not going to do it here. I've got some other things to do before the close. But next week, I haven't decided yet if we're going to do it live on YouTube or for members. I'm going to reconstruct the portfolio, because what's happening after I made 82% in my 401k last year compared to the S&P's 15, I think Nasdaq was up 25%, give or take. If I go instead of last year and I go this year, you're going to see that I'm actually underperforming the S&P. And then now it's too heavily weighted towards technology. And no surprise, tech's coming off as interest rates are moving up. So I need to diversify. I'm going to break down the portfolio that maybe 80% last year into something that is more balanced with more sector exposure. So I'm going to do that next week. Okay, so that's that. Now what's going on here? Basically, interest rates are spiking. The reason is people are afraid, investors are afraid that inflation is coming down the pike. Now, whether that happens or not, we shall see. All right. So if that means basically, let me just show you this chart right here. Okay. This is in purple is the 10-year TIPS, Treasury inflation protected securities, divided by the Treasury, the nominal yield of the Treasury. So whatever the difference between TIPS and the nominal yield of the 10-year Treasury are, that's the expected inflation in the future. So right now we're at 2.21%. And what I just can't help but think is I think for all those years, all the way back to the beginning of the credit crisis, when the Fed started and embarked on QE 1, 2, 3, and infinity and all these different operations, they were just telling us that inflation is going to be runaway. It's going to be massive. It's going to be unbelievable. Dollar's going to get crushed. And this was 2008, 9, and 10. And here we are, 2021, and I'm still waiting for it. We can't get a CPI and a PCE above 2% on any sustained basis. That hasn't been that way in a decade. So, okay. So what I'm looking at here is, okay, so the expected inflation is 2.21%, and the Fed has changed their expected behavior, and they're saying not only would we welcome or tolerate 2% plus inflation, we welcome it and we strongly desire it. Okay, and when the Fed strongly desires something, or anybody strongly desires something in the market, are they going to get it? Even the Fed, maybe, maybe not. So we've done obviously all sorts of unbelievable monetary policy stimulus over the last decade. Now we're doing all sorts of fiscal stimulus with all the programs the governments are putting forward on the back of COVID. So you can see here the Nasdaq in orange and the 10-year TIPS Treasury break even. They're actually very correlated. It's unbelievable. If you go to the 1 year, holy cow. inflation or the view of expected inflation is good. That's good for technology. It's so people are saying, well, all of a sudden yields are starting to tick up. So you can get a U.S. Treasury, get a corporate bond security, and make some kind of yield. But if you look at the actual yield, the nominal yield compared to the inflation, the current inflation that we have, the effective yield is 20 or 30 basis points. So are you telling me that people are going to dump all of their technology so they can make 30 basis points above the actual, if you take the nominal yield and then you compare that, you take inflation, subtract that from the nominal yield and get your real effective yield of 20, 30 bips, and people are going to dump technology? I just think it's been such an amazing run. People are looking for any reason they can to get out. So if we just drill down to this chart a little bit more, you can see, look, the Nasdaq in orange is getting cracked here and kind of creating a pretty good divergence here between the break-even rate and this. And we've seen this before. And, it's actually like the Nasdaq sort of overreacts on top of this, is a little bit more of a volatile series. And all inflation has done is started to go sideways. I mean, it could go up and just stay at this 2.5% mark, which is not going to cause the Fed to raise rates. Like, don't believe it if they're saying, oh, the Fed's going to get hawkish all of a sudden, raise rates. I just don't see it. I think there's too much technological deflation. I think investors are living longer. They're demanding yield. There's a constant bid for bonds and long-term. If you look at the 30-year bond, it's been going up since I've been out of diapers. Interest rates in the U.S. have been dropping for 38 years. I hope I was out of diapers by 4. I don't know. We'll get back to you on that. So that's what's going on there. The other thing is I didn't plan to bring this up, but the 10-year yield is still up against this 1.5, 1.6 resistance level right here. I'll go to the weekly. So we're through it. I mean, it's more like we're starting to get through it. This is a little concerning. We're through this, the support or broke through a support. Now it should offer resistance. We did poke through that, so that certainly is interesting. We're at the 61% retracement. You could throw the 786 on top of that, and we might have a little bit of a up here 2.0, which would be interesting. There is still resistance here, so we might back off. Okay, take a look at the TLT, which is the ETF that tracks 20+ year bonds. I just see this as support. I see this as fairly well supported down to the 135 mark. Take a look at HYG, high yield corporate debt stuff. The sell-off has been minuscule, nothing. So with TLT at support, HYG not selling off, expected inflation is right where the Fed wants it. I think this is just the sell-off. All right. So, okay. That being said, I did hedge with a butterfly last about 10 days ago. So I just want to show you that. I've got to handle this before the close in 35 minutes. So this is the video from, I recorded this on February 25th. And basically, and I'll come back to this in a sec, I took half of my profits in Roku. I've had the stock. It became such a big part of my portfolio. And this is my 401k. Here. So I had 60 shares total. I bought them on April 16th and August 26th at 127 and 160. So I'm actually just going through, just recording here as I'm taking profits here. Okay, so that's that. I got out at about 412, and I'll come back and show you the Roku chart in here in a second. But what I do want to show you is this butterfly. This was the Nasdaq chart that I was looking at here on February 25th, looking at the blue wave 4. And let me just bring that guy over quickly. Okay, so here's that chart. Here's February 25th. That's right there. We're looking for a move down in the Nasdaq as I just kind of fast forward through the video, trying to get down to like 12.6, 12.5 area. Just kind of laying out that. And basically what happened was that. So there's the wave 4 there. We went down to wave 5 to complete A, back up, retested it in B. It was down money on that. And then we've sold down into the 12.4 mark. And we're starting to bounce back now. So I was looking for 12.6 right here, and we got down to about 12.4. So it was a little bit more, a little further than I thought it would be there. So that's fine. So let me just keep going through here. I'll show you the actual execution. So I did the 12.9, 12.7, 12.5, a broken wing butterfly. So I'm selling, I wound up doing selling 4 at 12.7, buying 2 at 12.9, and 2 at 12.5. And I'm just going through to show you with a one lot Max, actually, there's the two lot there. Max loss was $5,800. Max potential gain was 34,000. And of course, I'm hedging, a portfolio that if the Nasdaq sells off, I'm going to be losing money. So it's not like I'm making a whole bunch. This was a hedge, and this is something that I want to do as I get ready for money management. Is when I see these sort of things happening again in the future, I like to go ahead and put them on for clients. And I have been speaking to clients who are following me and managing their own portfolios, and others at that I speak to, and trade analysis customers have done it. So I executed the trade at 30.50 right there. I bought them at 30.78. So where are we now? It's interesting. And again, the body of the butterfly is at 12.7. So we're coming up on that zone now. So we're at 12,670. So we're 30 Nasdaq points away from a possible perfect hedge, or a perfect pin. So let me show you the actual trading platform now. Okay, so it looks like we have a bad quote right there, but right now we're at 12,663. Right now I had about $6,000 of max risk. I probably would have been able to get out if it didn't work at a loss of 4,000. Right now I'm up 23,000 on the trade, and this is the actual one right here. So what I'm looking for is that if I can get a pin up at 12.7, you can look at the P&L here. It should be up around $33,000, $34,000. So I have another $10,000 to go in the next 30 minutes if this pin is gonna work. Okay, so we'll see. Let me take a look at the Nasdaq here real quick. And again, we're trying to squeeze up here, and this is the actual. I'm not using this blue count anymore. I'm actually using this red count. And let me just show you where we are. I think it's possible, guys, that we're just doing an ABC sell-off. This was a perfect low. This was the this 12,232 level is the 100% relationship of blue A compared to blue C. So net percent change in A was exactly equal to net percent change in C at 12,232. Plus was the 200% external retracement of B down to C. I mean, it was just perfect. So if we can just get above 12.7, those guys right now are still worth $111 will be worthless. And that's my money. So we'll see what happens there. Okay, so that's the Nasdaq. I think, guys, again, it's just an ABC sell-off. Okay, so I really think it could be just ABC. That might be the end of the selling, and we could start to move higher. And again, I just want to drive this point home. Bonds are not moving to new lows. Let me just pull this over here. If you look at the relationship between the Nasdaq in white and the 30-year bond in green, look, if we get down, this is the 20-minute. Basically, as bonds are going down, yields are moving up, hurting the Nasdaq. And the reason is these tech stocks, right, if they are trading with really high valuations like they were, there's an indication, or there is a desire, or there's the goal is to make a significant amount of profits down the line, okay? A lot of the tech stocks are trading really high valuations with expectations of significant future profits. It becomes a hard argument to have if all of a sudden you get U.S. Treasuries yielding a higher percent that you can make money now and start compounding that in the future. And that's why tech stocks are selling off. But again, consider the break-even rate, which is actual the nominal yield, and then you got to factor in inflation, what you're actually making. I just don't see it. So if we go down to like a 15-minute chart, like take a look at bonds right here. This little spike was the first thing to tell me in the Nasdaq we made a new low. Look at U.S. Treasuries, didn't make a new low. So, it was like, okay, so NASDAQ got a little ahead of itself, and that was on top of that fib zone that I just showed you, and everything kind of came together well. I still think, we might be at a low, but I still need to restructure my portfolio based on what I'm doing here, and, I've got 77 names carefully selected that I will be moving into in my 401k. Okay. So that's that. Also, I wanted to talk about two stocks quickly. Roku. I took half profits on Roku. I think I'd like to bring it back. I will do it next week. I want to see. I just want to make sure that this little wave 4 is actually holding. So we have blue 1, blue 2, blue 3. Pull back in 4. We've got a prior 4th support right here. This is the daily chart. I'll bring this in a little bit from a daily down to a half day. Let's go down to a 1 hour. And there's the blue 4. You're going to see that we have A equals C support right here. So wave 4 was possibly just like that Nasdaq, just a big 3-wave correction. ABC down, Alt C, 100%, A equals C, pin it, and then you do B versus C. I mean, you've got a nice thick support zone down there in Roku, plus the prior 4th support right there. That's a pretty good support zone. Also, Tesla. I really like Tesla. I've been talking about Tesla on CNBC a whole bunch. Kathy Wood is starting to talk about it, and I mean, I don't want to say I gave Kathy Wood an idea from ARK, but I love what Elon's doing on the SpaceX front. I think he's got a couple thousand satellites up there circling, providing global internet coverage, which will be faster than broadband. I think the FCC has permissioned him to get 40,000 satellites up there over the next 5 or 10 years. If he can get seamless global internet coverage that's faster than broadband, and he can connect that to his fleet, the individual passenger vehicles plus some kind of mass taxi service or underground tunnel service, I think it's going to be game over for the autonomous vehicle game, which Apple, Google, Amazon, everyone's trying to get involved. So I love Tesla. I hate the pullback, but I don't all that much. If you look at where this thing's come, I think it's a little A. Possibly B, maybe one more push down in C, but I do think a bounce is coming here in Tesla. If we look at the 5-wave move down that we've seen right there, we're into pretty good support down into the 570 area. I'm going to be adding more Tesla to my portfolio. One way you could do it, guys, is you could sell puts at the money and then take that credit and buy higher calls to call you into the position and just exercise. So you kind of get paid to accumulate the stock if it goes above a certain, like you could sell 600 puts and buy 670 calls. I'm sure you could do it for credit, and that's how you kind of get paid to accumulate positions. So, all right, that's just a quick overview. We're still 27 minutes to the close. I need to get just above 12.7 to have those puts be useless and max profit on that hedge. So as I said, money management's coming forward. I'm studying hard to take the 65. My book is around here somewhere, and that's going to be what's required for my RIA, Registered Investment Advisor, to launch. Trade analysis is going to continue. The two companies will exist side by side, and all as well. So please, if you listen this long, thank you so much. Thumbs up on that YouTube button if you don't mind. Let the Google algorithm, which, by the way, have you seen the relative strength in Google in this sell-off? Hasn't gone anywhere. Look at this. It's almost at new highs. Different counts. So we're almost at new highs in Google. So Google owns YouTube. YouTube algorithm knows that you like this content. So if you just kiss that little thumbs up button, I appreciate that. Drop a comment, question, insult in the comment section, and I'll address it. Okay, thanks, guys. Have a great weekend. Let's see what next week holds.